Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. It's turning out to be a pretty slow day ahead of the monetary policy decision tomorrow. We did come off the opening lows. We did see the Nifty reclaim the 26,000 mark. In fact, we went as high as 26,098. Since then, it has really been a slow drift, but we have seen some kind of sector rotation at play in the market. The Nifty Bank index has reversed course. That's in the red. The Nifty PSU Bank Index as well, after yesterday's drubbing, it had opened up in the green, but that's also given up most of its gains. Metals, they have also given up their gains because the dollar index saw, the most drop in the last 3 months. Because of that, we saw metal index and metal stocks being upbeat early in the day. But that trend is also reversed, and the metal pack, in fact, has lost all of its shine. But what's doing well is the IT pack. Of course, the rupee hit a fresh record low at open today, 90.41. That was a record low, but now it's come back to sub 90 levels. But still, the IT pack is gaining, and it's the top sectoral gainer. It's up somewhere around 1.5% or thereabouts. FMCG that have been witnessing some amount of selling pressure in recent times has managed to bounce back. 0.5% gain on the Nifty FMCG index. Real estate, this index has really been beaten down if you look at the YTD performance as well, and we've seen Realty really being on wobbly ground. But today real estate pack is also up and about, up 0.5% ahead of the RBI's monetary policy decision tomorrow. Autos also in fine fettle. So rate sensitive basket, apart from banks, are doing well in the run up to the policy decision. Pharma as well is among the top gainers. In terms of the broader end of the markets, the mid-cap index has completely flattened out. It was gaining somewhere around 0.3% earlier in the day, but kind of fizzled out. And the breadth of the market that was also skewed in favor of gainers, in the first half, has once again, turned in favor of the laggard. So breadth also not that great. And although the mid-cap index has slipped back into the green, it's turning out to be pretty slow. Last half an hour, of course, will be important given the fact that it's the weekly expiry on the Sensex. Let's see what really happens. But Nifty is now cruising along that 26,054 mark. In terms of individual movers, very quickly, let's take you through some names. TCS, Tech Mahindra, Infosys, all of these tech names doing well in the wake of rupee weakness. SBI Life, that's among the top gainers, 1.5% gain there. Adani Enterprises, Coal India, Bajaj Auto, ONGC, Bharti Airtel. So, some of these names doing well. What's not doing well, Indigo, that's the top laggard, thanks to all the flight cancellations, the mayhem that's happening at all these airports across the country. That stock is down 3%, has been a consistent laggard over the last few sessions. Hindalco has turned into the red. Eternal, Titan, all these names have been under pressure of late, and today is no different for them. Kotak Mahindra Bank, HDFC Bank, ICICI Bank, all these banking heavyweights, some of them that saw good traction yesterday, have once again come under profit taking, and so has SBI. Dr. Reddy's, Tata Steel, Nestle, these are some of the other laggards. So all in all, slow, but nevertheless, we are trading in the green. Of course, we'll have to see how the last half an hour or last few minutes really pan out on the market, as it's the Sensex expiry day. But let's bring on board Mayuresh Joshi, Director Research at MarketsmithIndia, and take stock of some of the stocks that are moving in the session today. But before that, Mayuresh, lovely chatting with you this afternoon. We have the big policy announcement tomorrow, and this time it's even more important given the kind of slide we have seen on the rupee. There is some conflicting data, in terms of strong GDP data and record low inflation. One camp says it is important that you dole out a rate cut, given the fact that nominal GDP has not been all that great. You need to support growth. But on the other hand, there is a camp that says that wait it out, wait for the rainy day to really dole out a rate cut. What are you expecting, and will the rupee crash sway the MPC's rate decision this time around?
Afternoon, Nandita. No, I think two things. One, I think the rupee depreciation obviously is a matter of concern. To a large extent, I think it does impact importers, as well as if this sustains above the threshold of 90. it does create an impact in terms of our trade and current account balances. Having said that, I think the expectation in terms of the central bank, I think they'll have to tread a very careful path because they are obviously expected to support growth. Liquidity is ample in the system as we speak. And therefore, I think the markets are not too perturbed, even if there is no rate cut of 25 bips, which happens tomorrow. I think it might just have a knee-jerk reaction. But I think the other factors at play in terms of RBI commentary, in terms of management of the rupee, I think that's going to be a large part of the question going
Hmm.
forward. Let's not forget, Nandita, that India has a large amount of forex reserves to manage, and they have ample
Hmm.
reserves on their hand. So what's going to be RBI stance is going to be extremely critical. But I think even if a 25 bips cut does not come through tomorrow, I think the markets are not going to get perturbed or volatile because of that.
Hmm. Hmm. But what if it comes by? Will you see a knee-jerk upward reaction?
No, I think it will be
Because there is a
limited
camp that
because I
believes
think
that perhaps RBI can go ahead and give a rate cut.
no, so I think it will be a surprise, no two ways about it for the markets.
Hmm.
But I think it will be limited to that extent itself. I mean, I don't see a runaway rally happening because of a 25 bips.
Hmm. Okay, got your point. Of course, in the wake of rupee weakness, a lot of these sectors have once again come into focus. We've time and again been speaking about IT and how the street is more tilted towards mid-cap names. But a lot of these brokerages have been turning constructive on IT because of valuation comfort, etc. But what is the thought now? Should one really make use of this rupee depreciation and how the tailwinds will play out, and get into some of these large cap names as well now, given the kind of valuation comfort they offer? Uh, how are you viewing the IT pack and other export oriented sectors as well in the wake of the rupee weakness?
So being a little bit more selective here, Nandita, I think for the IT sector
Hmm.
as a whole, obviously large cap IT is attractively placed from a valuation stack up compared to the mid cap peers. But we are entering into seasonally weak quarters. So Q3 is where furloughs, Christmas holidays, revenue days build will be lesser. Q4 is where discretionary spending will probably come through. And with the Trump tariff, what kind of impact does it have on various sectors is largely to be still witnessed in terms of how discretionary spending patterns will evolve. Commentaries, largely as a comparison between large cap IT and mid cap IT, have been far more resilient towards mid cap IT companies, where the managements have hinted towards better pricing, they have hinted towards better performance as far as absolute and relative EBIT and EBITDA margins are concerned, and stability in terms of constant currency revenue growth. I think commentaries relatively to large cap IT companies were a mixed bag. And therefore, I think the sector might just consolidate. And even if valuations, as I said earlier, remain in favor for large cap, I think the momentum might still continue with mid cap IT companies.
Hmm, okay, the momentum will still continue with mid-cap IT. But let's talk about another stock that's in focus, and it's a countrywide issue that's really weighing in on the stock, Indigo. There's absolute mayhem, over 250 flights cancelled. Things, of course, weighing in on the stock price as well. The stock has been on a downward trajectory as well. There's been an ATF price hike as well in recent times, some GST related issues as well. How are you viewing the stock? Ever since it entered Nifty, it has been on a downward trajectory. Will the overhang remain for some more time? And what should one do? Should one use these dips to get into the stock, given the fact that I think it is also making an entry in on the Sensex sometime soon?
Yes, I think that's what I've heard as well, Nandita. But I think two things. One, I think in terms of pure positioning of Indigo or Interglobe Aviation, I think there are no competitors per se. I think SpiceJet runs a limited number of flights.
Hmm.
Air India has routes and flights, but there are always complaints in terms of service, etc. And therefore, I think the monopoly or the leadership that it probably has, both in terms of the routes that it operates, the fleet that is manages, and the utilization plant load, I mean the passenger load factors still remain relatively high. Obviously, I think two risk factors. One, I think the recent episode and saga which is happening is sentimentally damaging for the stock. And if ATF prices
Hmm.
move significantly higher, I think that becomes a risk because that's one of the single largest contributor to input cost inflation, almost 40-45% accounted by ATF. Now, if you probably look at the routes that it is now adding in terms of international routes, I think the large expectation
Hmm.
is that with fleet addition for competitors expected to take some time, it will still enjoy its monopoly as far as the skies are concerned. And therefore, I think even if a dip comes through, I don't think that dip is going to be very, very significant. When it comes to the promoter stake sale in Indigo, I think that is something that the markets have very well gestated as we speak. And
Hmm.
therefore, I
Yeah.
do not personally foresee a structural downside. But again, I think it's a call that individual investors probably need to take because valuations probably remain on the higher side. And then a lot of favors are and factors probably still act as tailwinds for this stock. So when to enter is a big question mark. But yeah, I don't see any structural downside for all these reasons for the stock.
Okay, don't see any structural downside because of all these reasons. But there's another stock that's in focus, and this is an Avaz exclusive. CNBC Avaz sources have reported that SEBI may not be in favor of MCX launching its weekly expiry contracts. Now, they are concerned over retail losses in gold, silver, and crude contracts. And sources also say that SEBI has asked commodities brokers and exchanges to submit client trading data over the last 4 years. How big of a dampener could this be if this whole thing of weekly expiry doesn't come through for a stock like MCX? Could this be a spanner in the kind of rally that the stock has already seen? Could this actually be a big overhang on the stock?
That's a possibility. And again, I think the rally has been humongous for the stock itself. So I think the
Hmm.
volatility in gold, silver prices is something that have pushed up the average traded volumes as far as the exchange is concerned. Again, they have been adding a few contracts when it comes to electricity. Natural gas, again, is a big contributor to the overall volumes for MCX. And therefore, I think more optionality is getting added with more commodities and more contracts probably add to the favor. This news probably might impact the stock sentimentally. It has moved up quite significantly. But again, I think
Hmm.
the onus here is that there is expectation of more participation that can be included as far as MCX is concerned. And as a platform, I think it still continues enjoying significantly higher ADTV volumes as we speak. And therefore, I think anybody holding should continue holding a stock like MCX. I think the rating rankings that we see in Markets with India seem to be top notch.
Hmm. All right, got it. But there's another, piece of news that SEBI may be weighing investor suitability criteria for derivative trading, and it may consider direct or indirect equity exposure as the criteria. Now, exposure to cash market, equity, mutual funds, portfolio management services, all these factors may also be considered. SEBI, of course, will be consulting with exchanges on the suitability criteria for F&O access. But any more such reforms, how will that impact F&O volumes? What kind of an impact can it have on a stock like BSC? If you could share your thoughts on that.
So again, it's very fluid, right, Nandita, as we speak, and therefore I think
Hmm.
what kind of changes does the regulator bring will obviously have a reaction to the stock. But generally, if you have a long drawn out picture and a big picture argument, the expectation is that underpenetration is still stark as far as equity participation is concerned. And as that number goes higher, I think the kind of annuity revenues and the transactional revenues that BSE enjoys as a platform and as an exchange is obviously going to be significantly higher over the next 2 years, few years. There are other subsidiaries, including the STAR MF platform as an example, the depository business as an example listed through CDSL, obviously is expected to do well with this entire ecosystem expected to do well. And therefore, I think an
Hmm.
immediate pain might get felt in short-term numbers, but a long big picture argument stays in their favor. Obviously, how NSE's listing happens, at what point of time the listing happens, is something that will weigh on
Hmm.
to the exchange. Let's understand, I think it's going to be only two exchanges. So I think it's going to be a duopoly of sorts. And with a lot of tailwinds, I think the longer term structural story stays intact for all these platforms in my opinion.
Hmm. Okay, so yes, as you mentioned, it's quite fluid, but of course, we'll see how things really pan out and what kind of developments happen in that area. But let's shift focus to the QSR space as well. I was just going through some flashes on CNBC, mentioning that Devyani and Sapphire merger talks are now in an advanced stage. I think these reports surfaced earlier this year that they would be the Yum brands would be looking to consolidate these two, because both of these own franchises of Pizza Hut, etc. The main discussion point here is swap ratio, and the consolidation push is there and has been happening for quite some time. But if such a merger does take place, what would it mean for the industry at large? And as an investment avenue, would you really look at QSR right now, or do you prefer the quick commerce players like Eternal, etc.?
No,
Between
so
QSR and quick commerce, where is the investment case, and what does such a merger mean for the entire industry?
So as you rightly pointed out, I think it all depends on whether it's happening in the first place, and if it is happening, what are the kind of swap or merger issues that we are talking about. So very, very,
Hmm.
I mean, it won't be wise to probably just discuss this at this point of time. But for the space as a whole, QSR, I think the expectation largely is that
Hmm.
eating out and dining out habits have changed for not just urban
Hmm.
India, semi-urban and rural India as well. And that is where the significant shift in terms of consumption patterns are happening. They're following an asset light mode, and therefore, I think over a longer period of time, as consumption patterns evolve, the QSR players will
Hmm.
obviously have an advantage. When it comes to quick commerce as a space, I think what we are hearing in terms of an Amazon launch is going to be very, very interesting. At what prices do they come in? Is it going to be price competitive? And how does it impact these players? So I think it's a wait and watch as far as the QSR players are concerned. Sorry, the quick
Hmm.
commerce players.
Okay, wait and watch. Quick commerce, you said. All right, got your point. Just want to understand what is it that you would be watching out for in terms of in terms of defense talks, because today we have Russian President Putin coming to India, trade and defense deals. A lot of of course they will all feature on the agenda when on the talks in the talks between PM Modi and Putin. So, how should one really approach defense stocks? There have been order inflows in recent times as well, and stocks have seen good correction. Risk reward wise, do you think the defense pack is looking good right now? And in anticipation of all the deals that are going to come through, should one look at them right now?
Very selectively, Nandita. And our take is that it's a long
Hmm.
drawn out story which will play out positively because most of these players have decent order books, giving them revenue visibility over the next 5 to 8 years or 10 years even. They've been executing well. There will be some quarters where execution will probably falter, whether it's monsoons or
Hmm.
otherwise. But generally, I think with the strong revenue visibility and execution at hand, the margins being relatively better. Operating leverage will play out. They're adding capacities. And as India, as a defense budget remains extremely strong and robust, with a lot of focus in terms of Atmanirbhar initiatives, I think these players will have that advantage in terms of orders coming their way. In terms of nominated orders and not tendered orders. And therefore, I think these players would benefit. Let's not forget also that
Hmm.
exports has also become a big thing as far as Indian defense is concerned. We've touched a 25,000 crore
Hmm.
mark, which might actually accentuate over the next few years. So very, very interesting space, but you need to be a little bit specific.
Okay, have to be a little bit selective. One more question that's been lingering on my mind is with respect to real estate stocks. Realty as a pocket has been, hammered. If you look at the YTD returns for the real estate index, it's, deeply in the negative zone. But some, experts or brokerages are turning positive, saying that they have listed developers have seen good market share gains over the last 5 6 years or so. And as RBI has front loaded the interest rate cuts, and perhaps one or two more to come in this financial year. Do you see a case to invest in real estate right now, given the fact that they are so beaten down? Are you looking at valuation attraction here in the real estate space?
No, again, very selective because I think a large part of the gestation in terms of how numbers have played out have actually happened. Now, in terms of new
Hmm.
launches, a lot of developers are very, very selective, and therefore pre-sales velocity will grow at a decent pace, not at a humongous pace. At the same time, inventory is building up in certain areas, and therefore, I think the model that a lot of these real estate developers have adopted is a very simple model. I think the new expansions are happening either through a JDA, which probably reduces the leverage onto their balance sheet, and at the same time, I think as execution improves, with collection efficiency is expected to be relatively better, with demand still holding up in certain pockets. That is where I think the numbers will
Hmm.
stack out to be better. Now, from an accounting perspective, I think the entire accounting probably happens in terms of how the numbers are realized and not on an accrual basis, which then probably means how they're able to churn out their inventory faster, and then what projects are probably working for them is something that will play out positively in terms of balance sheet growth. Having said that, and then as a construct, I think DLF and Phoenix Mills is something where rating rankings look solid and strong. And therefore, I think these two stocks, in our opinion, is where earnings should continue remaining stable and relatively resilient.
All right, that's the view. Be selective, and of course, some of those names like DLF that you mentioned, keep them on your radar. But with that, we are running out of time, Mayuresh. Lovely chatting this afternoon, and look forward to another interaction sometime soon. Have a good rest of the week, and hopefully, I'll see you next week as well.
Absolutely. Always a pleasure chatting with you, Nandita. Thank you so much for inviting me. Sure.
Thanks a lot. Well, on that note, let's focus in on the market. Just about 9 minutes to go for the markets to shut. Let's see what is really happening right now in terms of where the market is. Okay, it's just at 26,035. So, 40, 50 odd points higher on the Nifty. Sensex up 130 points. Mid-cap index, trading with a negative bias. Breadth remains skewed in favor of laggards, 2:3. That's the NSE advanced decline ratio. Bank Nifty flattened out, down 40 odd points. It's back above that 59,300 mark. It has been fairly volatile for the Nifty Bank index ahead of the RBI's monetary policy decision. Gainers, losers, of course, IT names feature high on the gainers list. Some of these life insurers are doing well. Some two-wheeler names like Bajaj Auto doing well, Bharat Electronics doing well. Defense talks are in focus as Russian President Vladimir Putin will be in India this evening, and the bilateral talks will focus on trade, defense deals. Some mega defense deals may be signed up as well. So yes, defense talks in focus. But on that note, let's bring on board our technical guest for today. Joining me is Vishal Malkan, technical analyst at MalkansView. Vishal, great to have you on the show this afternoon. We'll talk about the market in just a bit, but I want to get in your thoughts on Kaynes Technologies. That stock has taken a tumble, quite a sharp one, 6% down, and there seems to be a reason behind that. Kotak Institutional Equities has raised some questions. They've said that purchase of almost $2 billion from Kaynes Electronic Manufacturing in FY25 have not been reflected in Kaynes Electronic Manufacturing's related party disclosures, and they've also raised a few more questions. The stock has taken quite a sharp knock. The stock has anyway been under pressure, but today's move, does it signify any kind of a breakdown on the charts? How are you looking at the charts? What is it saying? Can we expect further downside from here?
Yeah, I think the way it has moved today shows that there is some kind of pressure on the stock, and this can lead to further some decline for the next 2-3 sessions. So I would like to wait on the sidelines and see how it reacts to post this move today. And on a weekly basis, the closing is also important. So I'd like to see the weekly candle and take a move. So definitely there is some more pressure and some more downside, which is another 5 to 7% where there is an important support where it can go and take support.
Okay, wait and watch. Of course, how it closes for the week, that will be crucial to watch out for. But yes, the stock has taken a very sharp knock, down 6% in today's session. Let's talk about the index then. We made a good recovery from opening lows. We've reclaimed that 26,000 mark, and the good part yesterday was that we managed to defend that 20-day moving average level as well on a closing basis. Of course, there is some bit of volatility ahead of the RBI policy decision as well. If at all a rate cut comes by, hypothetically, do you expect a knee-jerk reaction on the positive side? And if yes, what kind of levels would you be watching out for on the upside?
I think Nifty has been showing resilience above that level of 26,000, and those correction which we saw for last 2-3 days has been halted today and taking support at 20 moving average. I think there could be a positive upside or a surprise after the rate cut if we see a rate cut tomorrow. And also the main concern what I see on the market is more or less the dollars, which is going above 90, and if it just comes back into that zone of 89, 89.5, that would be the best sign for the market to bounce back, and that's and that's where maybe Nifty is slightly hesitant to move fast in the upward direction.
Okay, of course, rupee weakness, has been weighing in on sentiment ever since that sharp slide, started earlier this week. But the Nifty PSU Bank Index saw a sharp cut yesterday. Today, it did try to make a mild comeback. Right now, completely flat. After yesterday's, sell-off, do you see any kind of trend reversal on any of the names? Or would you say that yesterday was just a healthy correction and perhaps one could look at some of the names like SBI, Canara Bank, Federal Bank and the likes?
I think PSU Bank has been a top performer in the last couple of months, but the move which it showed yesterday or last 2-3 days, it has mentioned it has been like a move which says that for the time being I'm done. Like I am now consolidating for the next few weeks before I move up again. So I would definitely look at some profit booking or some kind of consolidation mode for the next couple of weeks before it shows new momentum. Maybe 2026 is going to be the year where it again starts performing. So I definitely look at some booking some profits on these stocks if I am having leverage positions.
Okay, booking some profits on some of these PSU banking names, and looks like the sharp rally that some of these names have seen may have taken a break for now. But IndusInd Bank, that's the top FNO gainer, among the top FNO gainers today, showing a good up move of 2% or so. How are the charts poised here on IndusInd Bank, and within the private banking names, what do you like? Because yesterday, Bank Nifty made a very remarkable recovery led by the likes of ICICI and HDFC Bank, but obviously they will also see some weight reduction happening on the Nifty Bank index, right? So, among these top 4 or 5 private sector banking names, which ones would look attractive to you? Would you look at the likes of IndusInd Bank instead of ICICI, HDFC till that technical adjustment is out of the way?
I would look at first of all, let's talk about IndusInd Bank. I think it's come a long way from where it got hammered to those levels of 700. It bounced back nicely to almost like touching 900 in the last few trading sessions. So that's a very good move, but 900 seems to be a very strong resistance for IndusInd Bank, which would be difficult for it to cross. So I think the intermediate top for IndusInd Bank is in place, and we may look at some more consolidation before it goes above 900. And talking about other private banking names, I would go with best would be Axis Bank apart from others, because it has been showing continuous momentum, higher top, higher bottom on daily charts. Momentum indicators are in bullish zone. The resistance has been crossed. So definitely Axis Bank looks the best out of all the private banks.
Okay, Axis Bank looks best out of the private banks. And of course, IndusInd Bank may have found its top for now and may consolidate at these levels. Metal stocks were up and about this morning. We've had the dollar index cooling off, sub 99, worst drop in 3 months. In fact, but towards the end of the session, just about 2 minutes to go, but the metal stocks did fizzle out. Is profit taking, keeping the stocks under check? And should one really book profits now, because metals have seen a very good up move, even when the markets were down on the whole, metal stocks provided support. So is it a good time to take profits in some of these metal names?
I think metal has been, let's first talk about pharma stocks. As you mentioned, there's some profit booking there, and I can see that there is some, and we can look at some more maybe in the next few trading sessions as far as pharma stocks are concerned. And now let's go into the metal stocks. I think except for a couple of stocks, all of them are near the all-time high or 52-week high resistances. So that would be difficult for them to cross in a scenario where we are looking at dollar above 90. So I would only stick to the outperformers right now, which is PSU banks and auto sector.
Okay, PSU banks and auto sector, those two sectors find favor. But since you mentioned pharma, let's talk about Biocon. That stock was down in excess of 5% today. There's of course news flow around it. The board is meeting on the 6th of December to consider the Biocon Biologics stake buy. And of course, the company will be mulling fundraise via QIP, rights issue, pref issue, or further public offer in one or more tranches. The stock has clocked in good gains over the last month or so. In the last 6 months as well, it has seen good 15% uptick. Last 3 months as well, it saw quite a good up move. But last week or so hasn't been all that great, and today's move 5% down. How would you view that? What are the charts saying? Is there any change in the setup?
No, I think it's the same since last 2.5 years. When Biocon has tried to cross that level of 410, it actually managed to cross that last month briefly, but it did not sustain above that for a week also. So I think 400, 410 is a very, very strong resistance, and it's showing that there is a supply zone, and that same thing happened today also. So if I have to look at Biocon as an investment, I will only look at as a technical analyst to buy above that breakout level, which is 410 on a weekly closing basis.
Okay, that's about Biocon. But Wokhard, saw a very, very strong move, but today, of course, saw some bit of a profit taking. What's the call here? Should traders book profits in Wokhard after that stellar move that it saw in the last few sessions?
I think that stellar move which we saw in the last 3-4 sessions and there is a kind of a correction to that in the last 2 days. But if you look at the volume, the way it moved on like 3 days back, 4 days back, when it had that big green candle, compared to the last 2 candles, which is today including the red candle, the volume doesn't show that much. That means there is definitely it's like a retracement where it can again bounce back to those highs of around 1600 in the next few trading sessions. So I'll hold on to Wokhard and wait for those levels.
Okay, hold on to Wokhard. There is another stock. Some of these volume buzzers, the likes of Nectar Life Sciences. Of course, there's been an approval for a buyback worth 80 crore rupees. The stock, was a good mover today. In fact, in the last 5 sessions, it has rallied over 40%. Should one chase this momentum in the stock of Nectar Life Science?
I think the stock the chart looks good. It's purely bullish on all time frames, but the risk reward ratio would not fit into this. So I'll wait for a dip, maybe towards 19 or 18 and a half in the next few trading sessions, and then wait for a dip and then only get into this stock. At this moment, the risk reward ratio doesn't favor.
Okay, risk reward ratio doesn't favor Nectar Life. That of course has seen a very, very strong up move, but the markets have shut shop. It's been 2 minutes already. Quickly take a look at how we've shut shop for the day. 26,033, that's how or that's where the Nifty is placed at. It's ended in the green, almost 50 points up. For the Sensex as well, it's been a 160 point up move. Mid-cap index was on the back foot. It was trying to stick to the positive zone, but failed to do so. The advanced decline ratio also in favor of the laggards. It was kind of a sideways kind of a day, although it was the Sensex expiry. Some sector rotation did take place in the market. Banks were doing well at one point, they came off. PSU banks were doing well, they came off. Metals were doing well, they came off. But all the other sectors that have been underperforming in recent times, like FMCG, made a comeback. Real estate made a comeback. So yes, that sector rotation was at play today. No big moves on the index, so to say. But the good part is that we managed to defend that 26,000 level on a closing basis ahead of the RBI policy decision. So yes, counting down to that, 10 a.m. is when the policy decision will be announced. But in terms of other sectors that were out of favor, it was the energy pack and financial services pack that ended the day in the red. But all these other FMCG, real estate, auto, IT, IT of course being the top sectoral gainer as the rupee weakened even further. But if you look at the rupee, that's come back. Sub 90 levels, so that's a good thing. It fell to 90.4. That's a record low on the currency, but so I think that's something that kind of helped the index as well claw back from those 25,950 levels. In terms of individual movers, we already spoke about some of them. All these technology names like TCS, HCL Tech among the gainers. You also have the likes of Coal India that did well, ONGC, Cipla, Bharti Airtel, Bharat Electronics, these were some of the gainers. But let's take stock of some of the mid-cap movers then, which were the top gainers and losers on the Nifty 500 index. India Cements, that stock jumped somewhere around 10%. Hindustan Copper, 8%. You have Vijaya Diagnostic as well, 8%. Kaplan Point, Petronet LNG, That stock was up 5%, has signed a pact with ONGC. The stock was up and about since the start of the trading session. Some mid-cap IT names, Hexaware, L&T Tech, these are up in excess of 5%. Birlasoft as well. On the flip side, if you look at the top losers, you had Hitachi. That stock was down somewhere around 8%, and Keynes, of course, we've already discussed, that stock was down 6%. Hitachi, 8% down. Vishal, what did you make of the move, and what would you do with the stock?
I'm just looking at the chart. I think
Sure.
the way it has shown momentum on the downside, it looks like there is some hammering on the stock with some good volume, and I think there could be further downside to this, and we can look at subpar levels of 19,200 in the next few trading sessions, and then finally take some support there.
And what about Vijaya Diagnostics? I think that's also among the top gainers on the Nifty 500 index, 8% up move. What did you make of it?
Yeah, that's a good breakout on the stock, and I'm definitely looking at this, definitely further upside to this, and we can look at a target of around 1200 to 1250 in the next few trading sessions.
Okay, 1250 kind of levels on a Vijaya Bank could be expected. Another volume buzzer was Yes Bank. It will be included on the Nifty Bank index. It has been holding out. Any thoughts?
I think the way it looks like the chart shows positive momentum, but it still it has to cross that level of 25, 26 on a closing basis to get some fast momentum on the upside, but definitely coming out of the woods. So I would wait and watch for that 25 level.
Okay, that's the view on Yes Bank. One stock that has been stuck in a downtrend is Ola Electric. I think it made another fresh 52-week low today. I think record lows only, 36 rupees. That's where it's at, down another 5%. Any thoughts on what should be done with this particular stock?
I think I would like to sit on the sidelines as far as this one is concerned. We'll wait for some more updates, and the weight is falling, and I don't think we need to try to catch a bottom on this one. There is no sign of reversal, no volume sign, no pattern sign, so there could be further downside. So I would avoid this stock at this moment.
Okay, but any other two-wheeler names that you like among the three, Bajaj, Hero, Eicher? What's the preference?
I think we'll go with the best. The one which is showing momentum is go with the trend as technical analysis suggest. The first lesson of technical analysis to go with the trend and make your friend as your trend, which is Hero Moto. It's making higher top, higher bottom. It is not bothered by any other sector or any other stock. It's continuously showing momentum. There are no signs of reversal, and it's in the new zone, so there's no resistance on the top. Nobody's in a hurry to sell, so I think that's the best bet right now as far as two-wheelers are concerned.
All right, Vishal will choose to go with the trend. Hero MotoCorp, that's the preference, and a lot of other technical analysts I have spoken to, even they have pointed out that Hero is the best poised on the charts among the three. But Vishal, before I let you go, any recommendations for our viewers?
No, I think as I mentioned already in the session, that I would go with the best performing sector and the stocks, and that would be auto stocks and PSU banks. And in that, the top performing, of course, one of them is Hero Moto, and one of them would be Canara Bank on dips.
Okay. Hero MotoCorp and Canara Bank on dips. Those are the two recommendations coming in from Vishal. But Vishal, with that, we're timed out. Would like to thank you for taking out time and joining in. Always a pleasure, and look forward to more interactions as well.
Thank you so much.
Thank you. Well, on that note, of course, it was a sideways kind of a day. We did end in the green, defended that 26,000 mark on the downside. On a closing basis. So let's see what really happens in the monetary policy tomorrow. Rupee also kind of came back sub 90 levels. Perhaps that's something that kind of managed to lift some sentiment as well. But on that note, let me introduce my good friend Yatin Mota joining us on the show as always. Yatin, today was an okay sort of day, not a bad day. Yesterday we defended the 20-day moving average level on the closing basis, and today we defended 26,000 on a closing basis. So good going, given the kind of correction we've seen ever since we hit record highs. But tomorrow, I think there will be some bit of caution, at least till 10 a.m. when the announcement comes in. But mid caps, the breadth of the market continues to be on the downside.
Absolutely. This is like a liquid oxygen situation wherein the liquid probably harms you and the oxygen would not let you die.
I think you should say that dialogue in Hindi.
Yeah, तो oxygen तुमको मरने नहीं देगा और liquid तुम्हें जीने नहीं देगा. So that is the classic story in the market wherein the advance decline ratio consistently is on the negative side. Today also it was almost like 5:6, if I may put it that way, or 2:3. Mid caps continuously underperforming. In fact, both mid and small cap indices on the Nifty or the National Stock Exchange were in the red. Nifty Bank also was down 60 points, but the benchmark indices managed to do well.
That's true, benchmarking. But there was a lot of sector rotation at play today. When we started off, I saw metals were the top gainers. Dollar index has cooled off. But towards the end of the session, metals were almost down.
Yes.
But real estate, FMCG, they made a good comeback. IT was anyway doing well because of the rupee weakness. But real estate, FMCG, autos, all of them ended in the green. But on that note, Yatin, any stocks otherwise that caught your eye? Would you like to talk about Keynes Tech a bit?
Yeah. So, Keynes Tech, this is one stock which has some issues with related to disclosing related party transactions, disclosures relating to, goodwill, a lot of other concerns being pointed out by Kotak Institutional Securities. Now, if you were to see the broader points in the annual report analysis that Kotak has presented, it said that related party transactions are not consistently disclosed. There are certain dues to the promoter entities from the company's subsidiary. We have certain costs which have been, capitalized, and that means that you are boosting profits, right? Contingent liabilities are quite large and probably 18% of net worth, which adds to the uncertainty and the kind of capex that the company is undertaking that will put a strain on cash flows. I think these are the concerns which Kotak Institutional pointed out in this report today, and probably the stock, because of this reason or these red flags, was down 6% in trade.
Yeah, and I asked Vishal if there was like a major breakdown. Stock has anyway been under pressure only, but he said that he'll wait it out for a weekly close. He'll want to see the weekly candle before really taking a call on the stock. But yes, a big 6% cut coming in on the counter. Of course, tomorrow is the RBI policy. Would like to take our viewers through the expectations. But before that, let's talk about some of the stocks that were in focus. Yesterday itself, there was, this news about JSW Steel and JFE, JV. Of course, both of them will jointly own and operate the steel business of Bhushan Power and Steel under an equal partnership. Now, it was a 15,700 crore joint venture between the two. And JFE is expected to provide a large balance sheet relief for JSW Steel because a large part of the debt will move out of the balance sheet, will come down rather. So I think the street, mistook the enterprise value. I think that there was some confusion about regarding that, which is why the stock took a knee-jerk reaction. But post the market close, in the presser, I think the management pointed out that the valuation stood at somewhere around 53,000 crore rupees or thereabouts, and JSW will actually receive somewhere around 24,000 crore rupees for its asset transfer, while approximately 5,000 crore of debt from Bhushan Power and Steel will be removed from its books. I think so. That's something that brought some kind of relief, and then people really understood the contours of the deal. Some of the brokerages have said that the deal will be value accretive for JSW Steel, as it will enhance the fair value by 37 rupees per share. I was just going through what Motilal Oswal also said, that they've said that the net debt to EBITDA ratio is expected to decline to 1.7 times by FY27. They've reiterated their buy call and the target price is 1350 or thereabouts. CLSA has an underperform call with the target price of 890. But they've also pointed out that the deal will lead to a very sharp reduction in the company's leverage, and they look at a value accretion of 30 rupees to 70 rupees per share. A lot of other brokerages have also said the same thing, and the fact that this transaction will help JSW Steel deleverage its balance sheet meaningfully ahead, and of course that would also lead to the next leg of capacity expansion as well for JSW Steel. So yes, because of that, I think the street got some relief, and they understood the contours of the deal better, of course, by the commentary that JSW Steel also gave So yes, all in all, looks like a value accretive deal and could bode well for JSW Steel going forward.
Yeah. So, overall, if you look at JSW Steel, yesterday the stock was nervous, as you mentioned. But, steel prices remain soft. I think that is the reason why the steel stocks are underperforming the non-ferrous stocks. So, probably like a Vedanta all-time high, Hindustan Zinc was doing well. Today, Hindustan Copper was doing well. So, I think the non-ferrous pack is something which is outperforming now.
And we're also awaiting safeguard duty for steel
I think that decision has not been taken yet by the government, and the market is now assuming that it might not come.
Oh, that could be a dampener.
Let's see. That's still a lot of clarity required there.
Okay. But Yatin, let's move on to some exchange stocks, and there's some exclusive from Awaz on MCX, if you could take us through that as well.
Yeah, so MCX, that stock was in focus because what we gather from sources that SEBI is not in favor of launching weekly expiry contracts on commodities. Now, MCX has said that they are looking to launch weekly expiry contracts. I don't know if there is a formal, informal proposal, but obviously this is one area which the brokerages were quite positive on, that if weekly options and derivative contracts get launched on commodities, that would boost MCX's volumes. Instead of this, I think the market regulator has sought 4 years market data, profit loss accounts of clients, to ascertain whether or not there is excess speculation like equity derivatives and options in the case of retail investors, because it should not be the case that on one hand we have speculation being reduced in the equity stroke the weekly options market on NSE BSE, and the volume shift entirely to the commodity markets. I think post the data analysis, I think SEBI should take a decision on this front. But as of now, what we gather is that SEBI is not looking to approve the weekly option expiry on commodities. We have written to MCX, but I think the response is still awaited because we first broke the story, and I think now we have written to MCX regarding their views on this story.
All right, we will be watching out for this, an important story, and of course developments on this front will be keenly awaited by the market. Also, given the fact that MCX has seen a very, very stellar up move, so whether or not if there is some kind of a untoward ruling or decision, then perhaps that could take a toll. But let's talk about the very important development that we are awaiting. 10 a.m. tomorrow, counting down to the RBI policy decision, and this time around, there's a lot of uncertainty. Nobody can say with certainty what's going to happen, and the chances are 60-40 or 50-50 that there could be a rate cut, because one would argue that inflation management or keeping inflation under check is the primary mandate of the RBI, and that's been the case over the last few months or even a year, that inflation is now sub 2%. It's been sub 4%, but now it's sub 2%. So one would argue that that makes a case for rate cut. But also look at the GDP data. It was at a 6-quarter high, and by a wide margin it managed to beat expectations. But even there, one would argue that nominal GDP is in sub 9% category, and it's in single digits, and that's what flows through to India Inc. and earnings as well, right? So because of that, there is still case for a rate cut. But of course, we also have the rupee weakness coming into the equation now. Any further rate cut, Street believes, or economists believe, would put further pressure on the rupee. So the RBI may not opt for a rate cut on the basis of that. But even then, RBI governor, even in the last policy, adopted a dovish tone, said that there is space for more. But he never said that, okay, it's coming in the next policy. They may actually go ahead and press the pause button and wait for a rainy day to dole out a rate cut if required. And perhaps that is, even if they don't give a rate cut, perhaps that's what the street will be watching out for from the governor's commentary as well. That he should say that, okay, fine, right now we're not giving, but we are ready to act. Right. So perhaps that is something that the street will also be watching out for. Also, any kind of commentary if the governor gives on the rupee trajectory as well. Although they don't really talk much about rupee. Lata ma'am, I was talking to her today, and she said that even if they give any commentary about rupee, it will be predetermined and there will be no ad-libbing about it. So yes, but in terms of growth, forecast will be upped, because arithmetically 2 quarters we have done very well on the growth front. Even if we report 6% growth in the next 2 quarters, it has to be upped. And 7.4, 7.2, that's what the street is working with. And inflation as well forecast, there is a high chance that it could be cut to 2% vis-a-vis 2.6% that stands currently. So yes, a lot of dynamics at play. It will be very interesting to watch what really happens. But I was talking to Mayuresh. He said even if a rate cut comes by, he doesn't really see like a knee-jerk upside because that's something that I think the street may already have figured out that the dynamics are such that perhaps there could be or there could be none, whatever. So we'll have to wait and watch. 10 a.m. that's the time. Of course, we'll be getting you live coverage here on Money Control. So don't forget to tune in for that. But right now, I think let's call it a day, Yatin. It's been a sideways kind of a session, but tomorrow is Friday and it's going to be an action-packed Friday on the policy front, and we'll also see how rupee and markets react. With that, goodbye from me and Yatin. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates, and come back and join us tomorrow morning at 9 a.m. as well. Thank you for watching.